what I'm saying is once we get this realignment, meaning that stocks down, gold up, it's starting from a very, very strong position. So it'll go to an even stronger position because money that is in the stock market will move over into the commodity sector, particularly in the money metals, gold to lead. And you should see strength in the gold market like you haven't seen in quite some time. So I hope I'm clear on, could the gold price go down? Yeah, and a big sell-off it will. But it's also telling you ahead of time how strong it really is and how much it's geared up to go higher and higher. I think you're going to see a pretty good fourth quarter in 2024. And I really expect 2025 to start setting enough new highs in the gold price.
As if it were being read by a business news anchor. As we approach a critical juncture in the financial markets, renowned precious metals expert David Morgan is signaling a significant shift that could reshape investment portfolios. Morgan highlights an impending realignment, where declining stock markets may prompt a massive influx of capital into gold and silver, setting the stage for a potential rally that could catch many investors off guard. Morgan points to the unique strength of gold, which, despite the occasional sell-off, appears primed for an impressive ascent. He projects that as stocks lose their luster, we could see a substantial migration of funds into commodities, with gold leading the charge. The fourth quarter of 2024 is expected to be particularly strong. And by 2025, Morgan anticipates that gold could reach record-breaking highs, driven by algorithmic momentum and a growing recognition of its value as a safe haven asset. Turning to silver, Morgan suggests that this often overlooked metal may soon experience its moment in the spotlight. He notes the potential for high-profile investments, which could propel silver prices to new heights. With the silver market forecasted to grow significantly through 2031, driven by technological advancements and industrial demand.
Nuanced answer. I'll try to be as crystal clear as I can. First of all, the gold moves opposite the stock market, more so than the dollar. And so if you have the stock market doing so well, why is gold making nominal new highs? Which shows you when gold should actually be very weak because the stock market is doing so well, gold is doing well. So if you think about it, that means that really something's wrong because gold really should not be doing so well if the stocks are doing so. Which means that, yeah, in a big sell-off, gold would probably go down in sympathy with the stock market because there's always a liquidity squeeze, meaning that the fund managers manage money and even individuals, insurance companies have to sell whatever's liquid. Gold's usually the most liquid thing that they own, and they'll sell it off and selling pressure takes the price lower, but it'll be temporary. So what I'm saying is once we get this realignment, meaning that stocks down, gold up, it's starting from a very, very strong position. So it'll go to an even stronger position because money that is in the stock market will move over into the commodity sector, particularly in the money metals, gold to lead. And you should see strength in the gold market like you haven't seen in quite some time. So I hope I'm clear on that. Could the gold price go down? Yeah, and a big sell-off it will. But it's also telling you ahead of time how strong it really is and how much it's geared up to go higher and higher. I think you're going to see a pretty good fourth quarter in 2024. And I really expect 2025 to start setting enough new highs in the gold price, silver to participate, that more and more people and also entities, meaning pension funds, insurance companies, managed money, hedge funds, family offices to come into the sector again. Nothing feeds these algorithms more than momentum. And momentum is mass times velocity. In other words, volume and price movement. And when you have those two things working together, it's going to catch the algorithms and that's going to feed on itself. So I'm still very bullish. And I do see this shift. Is it going to be before the end of the year or not? I would guess yes. But as I said earlier, I've been early. I've been looking at the stock market to make a peak and start falling for some time. It really hasn't, but we have more clues and cues to that happening now than probably we have had for some time. So it is important. It is technically important just looking at a chart. It's also psychologically important because people, especially when you're in a leveraged investment like the futures markets, you want to not only trade with the trend, but you also want to have some level of confidence that you're getting in at a level where you're above support or near support so that you have an amount of confidence. And that feeds on itself. And then, of course, it goes to a new level and then it gets overbought, it sells off, and then a new support level has to build. But it kind of stair steps up. Going to what you implied is there's very little upside resistance on silver above about 33. And once you get to that level, will we beat a 50, 3 days later? And the answer is no, but it could accelerate, especially if depending on internet chatter, if a big participant comes in. I don't expect Warren Buffett to buy silver again. But if you get, let's say Elon Musk buys a large silver mine or buys stock in a large silver producer or puts his own silver refinery in somewhere, something along those lines. And I'm just saying Elon as an example. It could be someone else somewhere else. But all of a sudden there's some big news in the silver market that will bring awareness instantly. And a lot of people that haven't even thought about silver might start to look at the market and maybe run across this interview and say, really? Oh, that doesn't make any sense. You mean we're using up more silver than we're mining and recycling? You got to be kidding me. And once they determine that for themselves, they'll say, oh my goodness, the dynamics of silver look pretty good. And heck, inflation adjusted, it's really cheap. I'm going to take a X position in my portfolio in the silver market. And it's a small market. So once you cross that threshold, you could see.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Investors may find themselves drawn to this sector as a source of untapped potential. Interestingly, the military's increasing reliance on silver for its advanced equipment further underscores the metal's strategic importance. Morgan points out that heightened military activity could lead to a surge in silver demand, pushing prices higher and creating lucrative opportunities for those positioned in the market. While acknowledging the inherent volatility in precious metals, Morgan remains steadfast in his bullish outlook. He suggests that temporary setbacks in prices may provide entry points for savvy investors, as the long-term trajectory for both gold and silver appears poised for significant gains.
Or, solar panels or whatever they have in the field, can do their job under any conditions, sandstorms, windstorms, ice storms, you name it. So military specification is really usually a very difficult one to meet. And because of that, it's very hardened equipment. And if you have very hardened equipment, you want the best of the best as far as, power to weight ratio from the electronic side. You're usually looking at silver batteries, not in all cases, of course, but oftentimes you are. Then if you go to the weapons side and you look at, some of these missiles and torpedoes and how much silver they use in the circuitry, it's substantial. And, if you blow up that torpedo or missile, obviously that silver's been dispersed and you need to build another one. So, obviously, as I'm very much for peace, but nonetheless, the reality is that an increase in war weaponry usage would definitely put a demand on the silver side. How much, no one could predict unless you could tell me how big an increase we're going to see in the war efforts. And if you tell me that, we could, make a guesstimate of how much more silver that would use. If you have, 2 billion ounces in 1,000-ounce bars, and that's above ground stockpile, who owns it? Well, investors and industry. Really two categories. So industry is going to need it to produce whatever they produce: silverware, solar panels, silver mesh, silver shots, silver liquids, whatever it is for the industrial side. And then investors, of course, are looking for price appreciation. So they may hold 1,000-ounce bars in inventory, but they're not really willing to sell it until they get the kind of price appreciation that they want. In other words, they might want 10%, they might 20%, they might see a doubling in the silver price, whatever it is. So a lot of that silver really isn't for sale until we get to a higher price. And then kind of price begets price. In other words, as industry has to buy it in order to stay in business, that is a certain demand that really doesn't go away. And then that draws in more participants on the investment side, which means it drives it even higher. So I see once these two demands start to go for a limited supply and the price of silver is going higher as the above ground supply is diminishing. I think we'll get in a situation where we saw it once before, but this time there's a vast amount of education and people actually see it and know it's happening. Whereas when it happened between 1990 and 2005, unless you're a true silver bug and really studied the market, you're really unaware of that. But this time around, I think with people like Matt Watson, myself, and many others that understand the dynamics, and there's a lot more awareness of the precious metals, and they see these, and they see them coming from more than one source, and they can verify them. That will be added impetus. I mean, I would almost guarantee that Elon Musk is very aware of the projection for what's going to take place with the above ground inventory of silver going on from the last couple of years as far as a decade out or more, that the silver demand cannot be met industrial side only with what we're producing with mining and recycling. There could be a shift. There could be some substitute that comes in. There could be a big discovery. There could be some vast way to recycle silver very cheaply. I mean, you have to think about the other side of the coin. Is there something we're overlooking? And yes, it's possible, but it's not very probable. So the dynamics for silver is probably as good now as they've ever been. It's just
adding to the intrigue, Bloomberg's recent forecast sees gold potentially reaching $7,000 per ounce within the next 5 years, a figure that could reshape investor sentiment and drive further interest in precious metals. As geopolitical tensions and economic uncertainties continue to rise, Morgan's insights serve as a timely reminder of the value that gold and silver can offer in a well-diversified portfolio. With the dynamics of the market rapidly evolving, the question remains: are investors prepared to capitalize on the opportunities that lie ahead?